Welcome back to Upside Down Data. We need to talk about Bitcoin and the state of the crypto market. So if you've been following the market, then it's pretty clear that things are not playing out in the way that most of us would have hoped so far in Q1 of this year. Bitcoin has really just been going sideways this entire time. And the broader crypto market, so this is looking at the market cap of all crypto assets minus the top 10. So think about altcoins more broadly, has been suffering pretty horribly, really actually ever since December, downtrend, and then really crashed down here when we had that announcement of the potential tariffs on Mexico and Canada. That is what catalyzed this big move down in broader altcoins. And a lot of this is due to memes losing a ton of market cap. This is over on Coin Market Cap. We're looking at their memes category by market cap. And you can see how much it has dropped just since the peak back here in December of last year to where we are right now. A pretty brutal drawdown. So that and just alts in general have been suffering pretty mightily here. Now, what is going on and what can we think about going forward, both for Bitcoin and the broader market? You all know that I like to take a data-driven perspective on the market. And the reason why I like to focus on Bitcoin so much is that where Bitcoin goes, the rest of the market tends to follow, or at the very least, it's very unlikely for us to have positive action from altcoins when Bitcoin is also struggling. Now, so far this cycle, it has not often been the case, or not always been the case, that when Bitcoin does well, altcoins will do well. Although generally speaking, when you do get these big moves up, that is when you get these mini alt seasons. This move up led to an alt season, wasn't massive, but a mini alt season. This move up led to a mini alt season. So you really do want to see Bitcoin do well to think that alts could do well also. So I'm going to focus mainly on Bitcoin here, but I do want to loop around at the end to thoughts on altcoins and some other reasons why they might be struggling so much this cycle relative to previous cycles. But first, if you want to see live data for our models and more, you can go to our website, polaritydigital.io, link in the description. And if you sign up for our Polarity Digital Pro plan, you'll get access to live data from all of our models for Bitcoin, Ethereum, and a bunch of different altcoins and on-chain data and more. If you're interested, check it out, link in the description. So the first thing I wanted to talk about was actually sentiment in the market. Just how are people feeling? So this here is a model that I've played around with. I've never published this publicly, or at least it's not live on our site. Can look into that if folks would be interested. But it is one I do like to go back to every once in a while to take a look at. Basically what it's looking at is people's attitudes or their opinions of how bullish they are. Their feelings. Are people overwhelmingly bullish? That's kind of more positive on this metric here. Or are they really bearish? That would be when you're down to the bottom. It's really when is bearish versus bullish sentiment outweighing the other. And what you can see is that when you get to these kind of hot points in market cycles, that's when you tend to have these really high sentiment levels. Everyone just gets mega bullish, and that's really drowning out any bearish considerations out there. And vice versa towards the lows, that's when you have people getting really bearish, and that's kind of drowning out any bullish sentiment that's out there. And one of the things that we had noted, I noted this in the past, is that as we kind of had moved up into this phase of the cycle, after we broke to new all-time highs for Bitcoin and then did it again back over here late last year, we had pretty elevated sentiment levels. Even throughout this brutal range here, where a lot of people got bored and left, people didn't really flip massively bearish, or at least there was still a lot of bullish sentiment out there outweighing a lot of that bearish sentiment. Now, notably, Bitcoin set new all-time highs. We're now actually at a point where Bitcoin's up at, as I record this, 95.8K. And we actually have sentiment that's lower than it was down towards the bottom of this range that happened throughout 2024. And it seems likely this is going to keep dropping. Now, this is not just sentiment for Bitcoin. This is broader. This is the entire market. I just overlaid it across the Bitcoin chart just for reference. And so you might expect that as long as altcoins continue to get wrecked, continue to bleed out, maybe as long as meme coins continue to get wrecked, something that brought a lot of people into the space this cycle. We can debate a little bit more later on if this was a good or bad thing for the space, but that's just the reality. It would be reasonable to expect this to continue falling. And then the real question comes in at that point. If we're still in a bull market, at some point, there comes a point where betting against the crowd is very profitable. That when sentiment really gets detached from what the market's doing, so for example, if Bitcoin's still up at reasonable prices, up in the 90Ks or even up maybe in the 80Ks. But you have people acting like we're all the way at the FTX collapse and that it's a disaster and everything's going to zero. Maybe it's worth kind of thinking, okay, have the fundamentals really changed that much about the macro picture, everything else, that we'd expect this to be the end of Bitcoin cycle up here? 109K was the top, and we're just going to go in a nasty, nasty bear market. Or could betting against the crowd turn profitable? Now, we haven't gotten back down to those historical levels yet, where it might seem like a super deep value just from a contrarian perspective, but we're getting there. And I think what's really driving it, as I mentioned, is the destruction in altcoins and the fact that a lot of people who got into the space this cycle said, all right, Bitcoin's already expensive. I'm going to ignore that. I'm just going to go straight to altcoins. They tend to run, much more aggressively after Bitcoin's already done a lot. This cycle has actually been playing out a bit differently, in which that has not come to pass. And so a lot of this dismal reaction is because a lot of people are very heavy alts, very light or no exposure to Bitcoin. Therefore, you expect sentiment to keep on getting worse. And if we are still in a bull market, at some point, a nice contrarian trade could open up, though I don't think we're there quite yet. And this is actually a theme that's going to run through a lot of the data that we have, that things are looking a lot better now than they did, certainly back over in December. But it doesn't mean we're at a point where we can't see more pain. If we learned anything from Bitcoin last year, we can go into a really long, nasty range for a long time, longer than people would think is reasonable to still be in a bull market, and then you just go set a new all-time high. Same thing we did back over here in 2023. Just a long range, a lot of people saying that this was it. This was just a temporary relief bounce, bear market was back on, then we rip off to new all-time highs. This can happen, this has been happening, it's been the story this cycle. Could that just happen again? Long, painful range, even setting in new lows from here, but then the bull market's actually still on. So let's look at some other models and what they are seeing and what they're saying. So the first one I wanted to talk about here was our short-term upside downside potential indicator for Bitcoin UDPI. So high values, high risk, low values, low risk. Cares what moves that play out over days to weeks, shorter in its time horizon. And you'll notice that as we got up to the now current all-time high for Bitcoin, much like we did back the previous time we put a new all-time high for Bitcoin this cycle, we saw the short-term UDPI getting to a similar level, basically just above 2. You'll notice, historically speaking, getting up around that point has acted as an important resistance zone in previous points for Bitcoin. Mid-cycle top, mid-cycle top. Here it was actually these kind of late dead cat bounces were acted as resistance. And I've said this every single time we've gotten here this cycle. Important point to pay attention to how price reacts to it, because either this will be a big rejection point where we have some pain in front of us, or we just shoot off to all-time high, cycle top, basically. Shoot off to the cycle top. We didn't do that. Again, we did not go to the cycle top, or at least what could be the cycle top at this point, assuming we're still in a bull market. Therefore, we might just go back down into boring town for a while to set the stage for that next move up. And you'll actually notice that in this more recent move up that we saw on the short-term UDPI, going down here, then we went back up again. Look where we topped out. The same topping out point that's acted as resistance in this last range that we're in. Are we just back in that same regime once again, where we're kind of capped out at around 0, being this higher point? We'll then go down to these lower negatives somewhere. We'll kind of bounce around, range around. And then finally, when we get some new catalyst that could catapult us up to some new all-time high above that, we'll have to wait and see. But so far, this is looking an awful lot like it did back through here. And so what I think it's important for us to do is just kind of zoom out and realize that this happens. It's actually, this cycle happened every single year. We've had some really long, annoying, boring range that we then break out of and go to new all-time highs. Very possible we're going to do that again. What that might mean is that we just have to be patient. And in bull markets, it's hard to be patient because bull markets tend to make us very short-sighted. We want that immediate gratification. We're used to seeing meme coins rip crazy multiples, for example. When that suddenly stops happening, we say, what's wrong? Something's broken. The cycle must be over. Sentiment collapses. But really, it could just be normal market dynamics, the exact thing that we've seen played out before. I mean, even look back over here. We did the same thing. We kind of would use these intermediate levels of risk as our kind of local tops. And then finally, that's when we go and be able to get to these higher points. We'll have to watch and see how it plays out, but this is looking an awful lot like it did in the past. So I think it's just useful to kind of keep that in mind. And it's not the end of the world to have that as the outlook. It might just mean we have to be patient, but if we are still in a bull market, we will get to new all-time highs eventually. And what it might just mean is there's more opportunity. There's plenty of opportunity back here that if you missed it on this all-time high, you had plenty of opportunity to buy at a considerably lower level before the next move up to a new all-time high. Same thing could play out once again. So obviously not financial advice, but something I want to put out there, because I think what a lot of people are kind of saying right now is either bull market's on, we just have to immediately go off to some crazy price for Bitcoin, or the bull market's over, have to immediately crash to some horrible price for Bitcoin. I actually think something more in the middle could play out like it has this entire cycle. And then maybe that would actually coincide with sentiment getting really bearish. That could actually set the stage for that real massive push to the upside, to new all-time highs and whatever that cycle top will be. Once people are really out of position, that's when maybe price can really move more aggressively. Now, one of the other things we can look that also gives me this perspective, or the reason why I'm kind of taking this view of Bitcoin, that's our forecast model for Bitcoin. So that's what we're showing here. Basically, it's giving its forecast, kind of looking 6 months generally, kind of roughly in the future, bullish or bearish, or what percentage likelihood are we going to be up or down in that time horizon. And so what you can see with it is that with this cycle, look how bullish it got all the way through here. This is one of the reasons why I was so mega bullish, and vocally so, both here on the channel and over on X, just saying buy Bitcoin, this is the time. But you'll note that as we've started getting to this point of the cycle, we're starting to get to lower and lower confidence levels. It's still leaning bullish overall, but not nearly as massively so. It's getting more concerned. And what that might suggest, as I've talked about before, is late stage of the cycle. And so when you get to this point, when you're up, currently we're at around 0.55, even when you're up at about 67, whatever percent, looking out in the next 6 months, there's still quite a decent probability the model's giving that we're not going to be seeing particularly positive price action over that time period. 30% chance things happen all the time in life. That's why it's 30% chance. There's a chance. I think people tend to get very kind of focused with Bitcoin or crypto in general of just binaries, just up or down, and get really mad at this idea that sometimes things are uncertain and we actually don't know. And that's really what this model is trying to do. It's not trying to tell you black and white, like guaranteed up, guaranteed down. It's trying to give you a probability so you can basically calibrate yourself to the future. You can maybe lean bullish, like it's suggesting now, but don't be shocked if it doesn't play out. That's really what this is telling us right now. It's reasonable to lean bullish, but leaning bullish is not the same as just saying, all right, time to bet the farm, time to mortgage the house, go all in, because there's still quite a bit of uncertainty and the possibility it won't play out. That's inherently what risk management is about understanding when are the points to put more or less chips on the table. And part of that is that you won't necessarily be all in on the next push up. And some people get really mad about that. They say, well, then the model's broken because it didn't have me putting all in when the market went up. But the problem with that is that you run this 1,000 times, 300 of those times you might have actually gone down, and people would have been really mad if they've been told to put everything on the line. And that's just a really important point with crypto markets, that risk management means that sometimes you're not 100% certain, and it's fine to not be 100% committed to the market. It's the difference between gambling and investing. Investing, you manage risk. Gambling, you just hope for the best. And so that's where we are with this model. And that's another reason why, when I'm kind of looking further in the future, I do think leaning bullish makes sense. We could go off to some cycle top from here, but at the same time, there's a lot of uncertainty. And so I personally wouldn't be horribly upset if I, for example, had taken some chips off the table. And if we go up, still some exposure, that's great. Capitalize on that. But make sure I don't lose out on all the gains that I enjoyed from early on in the cycle. What people can sometimes do is they successfully buy the bottom, but they fail to sell the top because they're worried they're not going to sell the exact top. But that is not the way that it tends to work. It's very difficult, if not impossible, to sell the exact top. You tend to be better off being a bit more dynamic, being really aggressive when things are a lot more certain, being more cautious when they get less certain, and not worry about extracting every last penny from the market. That rarely works out well. So that's where I'm seeing this kind of situation where I still think that kind of range idea makes a lot of sense. Still lean bullish, think that higher highs are definitely possible for Bitcoin, and I think probably a little bit more likely than not, but also that possibility that the bear market could come. And so do you just want to bet the farm and hope that it works out for the best, or do you want to manage risk? That is the question I think is confronting a lot of us right now. And so I remain data driven. I'm going to be bullish until the data clearly say to be bearish, but that doesn't mean that you have to be all in. But also realize if you're not all in, that's a choice you make. You won't be able to get every penny out of the market but you might save yourself if things don't go the way that you hope. So that's why, again, I say this every time, and I'll say again, this is not financial advice. You should play the market the way you think is best. But this is what I'm seeing when I'm looking at the data. We're in, again, uncertain times. And another thing that also makes me concerned about where Bitcoin is right now, at least in the shorter term, is what it's doing relative to its DXY-based fair value. This is something we've talked a lot about on this channel. This is the fair value of Bitcoin taking into account what the DXY, the strength of the dollar relative to a basket of other fiat currencies, is doing. And you see this does a very good job of anticipating these points where Bitcoin gets really undervalued and price moves up to meet the fair value, but also when Bitcoin's overvalued and price will come back down to meet fair value. Price tends to have this kind of mean reverting relationship with the fair value. And when we look where we are right now, we are pretty clearly overextended from the DXY based fair value. It's currently sitting at just over 65K. Bitcoin's up at 95K as I record this. Quite a big gap between those two. And just like what happened through here, I was talking this entire time that Bitcoin would probably struggle to do anything too impressive while it still remained above its fair value. Same thing, I think, could play out again. And we might need this gap to close, DXY based fair value move up, maybe price move down, get to this point of undervaluation again, and then that can catalyze that next move up. That's what's happened in each of these legs up, frankly. Bitcoin's had to be undervalued before you saw that big explosive move. Would not be shocking to see that here again. And that's another thing that gives me pause, gives me concern, at least in the shorter term. So then also to wrap up, let's talk about some on-chain data and what they're showing and where we are in the cycle. So what I'm showing you here is the aggregate realized profit and loss on the Bitcoin network. So this here is just the raw number. This is USD denominated. Basically, positive values here mean that people are realizing a lot of profit, negative that people are realizing a lot of loss. And so what I ended up just doing with this formula, just to show you real quick, is very simply I normalized first this to be Bitcoin terms. So instead of denominated in dollars, denominated in Bitcoin, and then took the 90-day moving average. And what that gives you is this very nice visualization of where we are in terms of the market, in terms of people taking profits or loss. So you'll notice towards these kind of notable topping points in the cycle, massive profit taking happens. And then basically they become way more sellers than buyers, price collapse, you go into a bear market. That's what happens in these prior cycles. Now, the good news so far is that we are above zero. So zero is right around here. We are above zero, and we've stayed there ever since Bitcoin basically put in its all-time high back here in early 2024. We haven't gotten to these really extreme levels. So there's two different ways we can look at this. So one thing we can see is that in the 2016-2017 cycle, we actually stayed above zero for a lot of this cycle and pretty high above zero as well. So a lot of profit taking happened this entire time. Just that there was a lot of demand that stepped in to continue buying that until we really got to a crescendo and things collapsed. And there are two things I think are important to look at with this metric, both the absolute level, how high is it? The good news there is we haven't gotten nearly as high as previous cycles, so that might mean there's still gas in the tank this cycle. But the second thing we can look at is kind of area under the curve, or how long have we been above zero and to what degree have we been above zero? Because this selling has to be absorbed by someone. And as we continue seeing a lot of profit taking, that has to be absorbed by someone to keep us at similar prices to where we've been. And the longer this might play out, where we see this positive profit taking, at some point you have to ask the question, is enough new demand going to continue to step in to support price? Or will we again get to a point where finally there's too many sellers, not enough buyers, where we have that collapse? As long as we can continue having enough buyers to absorb this selling pressure, then we're not going to get there yet. And so that's what I'm also going to be looking at here. I think we're going to get to this point, another rollover like we saw back over here in early 2024, which could lead into this big range. A lot less profit taking happen. Basically, sellers stop. And then enough new demand steps in to shoot us back up once Bitcoin's seen as being more of a deal than it is right now. People might still see it as being very expensive up at 90K. Maybe we have to move back down to the 80s before they start saying, oh, okay, well, 80K, I can justify buying down here a little bit more if I think at least a return back to prior all-time highs is a possibility. And so that might see a lot less profit taking happen. Maybe people are just content to have sold that they did. Other people are waiting for higher prices, and more demand could step in as we maybe trend down to lower prices there. But something I think is going to be important to watch for sure. And so when I look across all these data, none of them scream to me that we've put in some mega cycle top yet. I think that's very clear that if this cycle is going to end up being anything like prior cycles, which of course you can say maybe it won't, maybe this time will be different, but if it will, we haven't seen that yet. We have not gotten to, for example, risk levels that have been characteristic of cycle tops. We have not seen the forecast model really collapse to levels that it has going into big notable bear markets. We haven't gotten quite as extreme of an overextension from fair value as we have in prior cycles that have led into bear markets. We haven't seen very clear, definitive signs of that just yet. But we are seeing is potentially a reset. That the hope going into this year was that we're going to have something more along the lines of what we saw here in 2020 into 2021, just an explosive parabolic bull market that would then shoot alts up to the moon and everything would be fantastic. Problem is we haven't seen that. Bitcoin did move up, but then it stalled out. Alts got destroyed, have not been doing well. Sentiment is collapsing as a result. That might just mean that the market needs some time to digest this. You add on top of that a more uncertain macro backdrop where you have the Trump administration doing a lot of things very quickly and aggressively, a lot of change happening. Markets don't like uncertainty. That certainly, in my opinion, probably hasn't helped and has led to what we're seeing here, a lot of this weakness. That might continue, and especially with altcoins, which are more risky, probably less risk-taking appetite right now in the face of all that. We might need some things to calm down before we can really see things turn around and the market start climbing that wall of worry again. And the final thing I want to say about altcoins, and this remains my thesis, and it continues to be there, and I think we're continuing to see this, and meme coins have kind of brought this out, I think, in some ways. My view going into this cycle, all the way back when we're down here in the depths of the bear market, was that this cycle might be the cycle where finally actual utility, real world utility starts to dominate the altcoin space. So the market finally might decide, all right, we're done with just speculation. We actually want to see something that we think will make a real footprint on the broader economy and world, something that will generate a lot of profits, something that will actually put crypto on the broader stage, not just something that's more internal to crypto. Because every cycle we've had that for altcoins, since altcoins basically have been a thing. All the way back over here, it was, tokenize everything. It was this brand new thing, this new exciting way for companies to raise money. All these different narratives are spinning around about how we would, basically tokenize the world, all finance would be on it, etc. Then that collapsed. Then going to here, we had DeFi. And again, that idea of maybe not so extremely tokenize everything, but these kind of more interesting DeFi projects coming out, or decentralized projects, and then NFTs and what they might be, all this kind of hype and narrative about how this might be something that could change the broader world. You had Web3 gaming being a narrative, you had metaverse being a narrative, which obviously ultimately led to nothing this last cycle back here in 2021, but it was a cycle that we could believe in, that people could really attach themselves to. I think now we're kind of past that point where this cycle, it's hard to identify anything that's really like that. And one of the things that people argue about why memes have been so successful is they kind of cut out all of that pretense. They say, this is just pure speculation on the face of it. We're not going to pretend to be doing anything that's going to radically change the world. And then it kind of is that cynical view of crypto that it's all the speculation and gambling anyway, let's just lean into it. And that can only go on so long. You're not producing something that is profitable, that is productive in any way. Meme coins are collapsing. Doesn't mean that the top's in for memes this cycle or anything like that. But I do think this is kind of that progression where the market's kind of getting tired of altcoins. They're getting tired of these narratives that haven't gone anywhere. And I think we might just need something that's actually real for altcoins to really make that next leg up. And that could come from real world asset type ones. That's something that's rebounded more decently than some other assets this, in whatever rebound we've gotten so far. It could be something that is going to play out, that we're going to start seeing that. And especially as the regulatory environment gets better, that could come more into focus. But I did just want to mention that I think there's a lot of bearishness around alts right now, but in some ways it's not terribly surprising to me, especially in this current environment where risk taking isn't nearly just as extreme as it was coming out of, for example, the March 2020 collapse, when you had interest rates hit basically zero and all this liquidity pumped in the markets, things went crazy, a lot of risk taking. We're not in a situation like that right now. It might be that we actually need more of those narratives to take hold with altcoins, which could actually be more pain could have to come. And it might just kind of take some time for those narratives to actually figure themselves out and for the market to identify those things. And whether or not those things actually yield massive, profitable enterprises this time around, profitable protocols, It's more about something that people can actually sink their teeth into as being reasonable, that if the bull markets continue, that we can then have that narrative drive it up. And it could be actually the next cycle when finally crypto makes that jump, kind of like the dot-com bubble bursting into what led to Web 2 and all the success that was there. So something that I think is just important to keep in mind, and the advantage that Bitcoin has, and maybe the reason why it's diverging so much from altcoins, is that it's already established its use case, store of value like gold. It doesn't need to have that kind of profit generation revenue or anything like that. It's already achieved what it's seeking to achieve, or at least it's getting there in the public perception. And so therefore, the argument for why you'd buy Bitcoin is much more intact. But I feel like with altcoins, it's kind of a little bit less clear with a lot of these. So those are all my opinions. Curious to hear your thoughts in the comments. But that's, again, what I'm seeing. I think we might just have to be patient with the cycle, let the data come in, then determine are we still in a bull market or not. And if we are, just patient through whatever chop might come, the boredom, to then be able to get the rewards. All right, if you like the content, or subscribe to the channel, give the video a like, follow us over at X, a lot of updates from our models, more over there. And you go to our website, claritydigital.io, to see live data from our models and more.